Okay, so today we will discuss about long-term capital and how to calculate long-term capital gain. Short-term capital gain calculation we have already understood in the previous class. Now long-term capital gain, how we will calculate? Method is same. First we should take the sale consideration that by selling that asset, how much rupees consideration is received by the SSC person. That will come as the starting point. Then here, instead of cost of acquisition, we will take the indexed cost of acquisition. Okay, we will take the indexed cost of acquisition. What is indexed cost? Everybody write down. Indexed cost means increased cost. For purpose of understanding, everybody can note down indexed cost means increased cost. Indexed cost means what? Increased cost. Okay, indexed cost means what? Increased cost. And how we will increase the cost? By using cost inflation index. By using cost inflation index. How cost will be increased? Cost will be increased using cost inflation index. Okay, so this benefit will be available only for long-term capital gain, not for the short-term capital gain. So you should write and keep indexation benefit is available only for long-term capital gain, not for the short-term capital gain. Okay. Now, what is the concept of indexation? Let us understand. Now, long-term capital gain, you know that if you are holding the property, for example, land and building for more than 24 months, and after that you are selling that property, long-term capital gain will arise. Now let us take an example. A person has purchased the property in 1980 for 50,000 rupees. Okay. In 1980, a person has purchased the property for how many rupees? How much rupees? 50,000. And in 2020, he sold that property for 30 lakhs. So obviously it will be long term only because difference is huge. We know that if you are holding that property for 24 months and 1 day, it will become long term. And 1980 and 2020 means huge differences there. Yes. So it will be obviously long term capital gain. Okay. In 1980, purchased the property for 50,000 and sold the property for how much? 30 lakhs. Okay. So sale consideration minus cost will become 29 lakh 50,000. So if you will see, it is a very big amount. This will become the capital gain. And in this, if you will calculate 20% tax, it will amount to 5 lakh 90,000 plus 4% education and higher education cess. It will amount to 6 lakh 31,600 will be the tax amount you have to pay on this capital gain. Understood? Because long-term capital gain is charged at 20%. Okay, so tax rate on long-term capital gain is 20% plus 4% on tax will be your education and higher education cess. You will have to pay on this 20%. So now see, if you can see, it is a very huge amount. 6 lakh 13,600 is the tax amount which you have to pay. So for this purpose, Income Tax Act said that if it is a long-term capital gain, you can increase your cost by using cost inflation index. Okay. And you will get the benefit of increase in cost. If cost will increase, capital gain will automatically reduce. Logical. If cost will increase, your gain will reduce. So that's why in case of long-term capital gain, you can take the benefit of indexation. And how indexation will be calculated? It will be calculated using cost inflation index. Okay, what is cost inflation index? That we'll understand at the time of illustration. So everybody understood this much, what is indexation and why indexation is applicable for long-term capital gain. So difference will be huge, and you cannot compare it. No, 1980 and 2020, you cannot compare because there will be huge difference in cost between these 2 years. So to bring this cost, 1980's cost to 2020 term, we will apply the indexation. Then only we can compare. Otherwise, it will not be proper comparison, and huge amount of tax will be liable. SSC will be liable to pay a huge amount of tax. Clear this much, everybody? What is indexation and why it is applicable? Okay. Now let us take the illustration of this long-term capital gain. Read this question. Mrs. Prerna sells the land during the previous year 1920. Sale consideration is 8,50,000. These capital assets were acquired in 2002-3 for 2,70,000. Brokerage paid is 3,289 rupees 3,289. Compute the capital gain for assessment year 2020. Simple question. Prerna is selling the land, so this will come under land and building category. And for long-term capital gain, it should be more than 24 months. Period of holding should be more than 24 months. These capital assets were purchased in which year? 2002-3 for 2,70,000 and sold in 1920 for 8,50,000. So everybody tell whether this will be a long-term capital gain or a short-term capital gain. This case will be long-term or short-term. This capital gain will be long-term or a short-term capital gain. Long-term, correct, because period of holding will be more than 24 months. Obviously, 2002, 3 and 1920. There is a huge difference. Okay, around 17 years difference is there. So you are holding that asset, that is Mrs. Prerna has held that asset for 17 years approximately, you can say. And condition is that it should be more than 2 years. Okay. So this will be obviously long-term capital gain. So indexation benefit will be applicable. Now, if you will see here in note, one statement is cost inflation index 2002 305, 1920 is 289. See, just now we discussed, now we will increase the cost by using cost inflation index. What is cost inflation index? Understand, an item which you could purchase in 2002-3 for 105 rupees, that same item is costing 289 in 1920. This is the basic understanding of cost inflation index. Suppose if you want to purchase any item in 2002-3, you should pay how much rupees? 105 rupees. Okay, but same item if you want to purchase in 1920, you will have to pay how much rupees? 289 rupees. Okay, so cost is increased. No, inflation it will keep on increasing every year. So this is the meaning of cost inflation index. So using these values, we will increase our cost also, assets cost also. Now, important question, this cost inflation index amount will be given in the question. No need of remembering these values. Okay, this will always be given in the question. Okay, at the end of the question, this data will always be given. Okay, now if more data is given, what is relevant, that only you have to take. What will be normally relevant is the year of sale and year of purchase. So if you will see in this question, only 2 years of data is given. 2002-3, which is year of purchase, and 2019-20, which is year of sale. Okay. Sometimes what may happen in question, more data may be given. Okay. So you have to select which year is relevant for you. Year of sale and year of purchase will be normally relevant. If there is some improvement given in the question, that year will also be relevant. Okay. So here, cost inflation index, everybody understood. I'm assuming that cost inflation index means if you want to purchase some article in 2002-3, you would have paid 105 rupees for that item. In 1920, same item will cost 289 rupees. That is the increase in cost. So now how we will increase our cost using these value? Very simple. 2002-3 year of purchase and 2019-20 is the year of the sale. Okay. So what is cost inflation index in 2-3? Given 105 and 1920 it is 289. Now in 2002-3 cost of asset was 2,70,000. So what will be the cost of asset in 1920? Simple. You can cross multiply and find out the answer. So you will get the inflated cost of this asset in 1920 using these indexation factors. Anybody calculate what will be the revised cost or increased cost? Just to do the cross multiplication. Everybody knows how to do cross multiplication. Yes, 2,70,000 into 289 divided by 105. You will get the inflated cost. Anybody calculate what will be the revised cost? These basic details you have to note out: name of the SSC, previous year, assessment year, year of purchase, year of sale. Nature of capital gain will be long-term capital gain because period of holding is more than 24 months. It is approximately 17 years. Okay. Sale consideration 8,50,000 given in the question. Sale consideration is how much? Sale consideration is how much? 8,50,000 no, given in the question C. 8,50,000. Now, instead of cost, we will take the indexed cost. Here only difference will be there. You will not take 2,70,000. You will take 7,43,143. How we have calculated? See, here calculation is given. In 2002-3, 105 is becoming 289. So what 2,70,000 will become? Just do the cross multiplication. You will get this index the cost means increase the cost. Okay, and you are paying brokerage 3,289 given in the question. That also you will reduce from your consideration. So you will get the long-term capital gain as 1,03,563. Now understand, if you would have reduced to 2,70,000, your gain would have become big amount. Understood? No? Instead of this 2,70,000, we are substituting it with the indexed cost. Why? Because it is a long-term capital gain. Now, see, difference is 17 years. No, logically, if you will understand, both this year you cannot compare because in 2002-3 cost would have been very less. Okay, that is 105 rupees, and it has increased to 289 in 1920. So for that purpose, Income Tax Act is giving benefit for increasing the cost of the asset also. Okay, and you will get a reduced capital gain. This is the purpose of indexation. Okay, always note and keep indexation benefit is not applicable on short-term capital gain. It will be applicable only for long-term capital gain. Okay, because short-term capital gain will be less than 2 years in case of land and building. And in 2 years, there will not be much variation in cost. That logically you can think like that also. Clear? Understood, everybody? The next illustration on capital gains. Everybody go through it. Mr. Ranade provides the following particulars of assets transferred by him during the previous year, 31st March 2020. So 1920 is the year of sale. Okay. You are required to compute this income from capital gain chargeable to tax for assessment year 2021. Obviously, if previous year is 1920, assessment year will be 2021. So year of sale is 1920. Remember that part. What is selling, that detail is given. See, a residential house. So this will come under category land and building. In Delhi, which was purchased on 11th November 2001. Okay, so this asset residential house was purchased in 2001-2 for 14,54,000, sold on 1st January 2020, that is in 1920, for 1,46,50,000. And he has incurred the transfer expenses 50,000. Okay, here some details of investment made by him is given that we will discuss later on. Okay, first everybody tell whether it will be a long-term capital gain or a short-term capital gain. He's purchased the house in year 2001-2 and he's sold the property on in year 1920. So whether this should be a long-term capital gain or a short-term capital gain. Long-term capital gain, very correct, because period of holding will be more than 24 months, obviously more than 24 months. Okay. 18 years, no, approximately. Period of holding is 18 years, which is more than 24 months, that is 2 years. So this will be definitely long-term capital gain. So if it is a long-term capital gain, we know that we will get the benefit of indexation. And for indexation, what is required? Cost inflation index is required. So it is given in the question C. In 2001-2, it was 100. In 1920, it is becoming 289. Means if you could purchase an article in 2001-2 for 100 rupees, it is becoming 289 in 1920. Okay. By using this two value, you can increase this cost and purchase cost. Understood? Because property was purchased in 2001-2 for 14,54,000. What will be its current year cost that you can calculate using these two values, cross multiply. Okay. So everybody tell what will be the indexed cost. What will be the indexed cost? Everybody firstly calculate what should be the indexed cost. Now you know how to calculate. 2001-2, year of purchase, year of sale 1920. Year of sale is 1920. So if an item was 100 rupees in 1-2, it is becoming 289 in 1920. So what will 14 lakh 54,000 become in 1920. What will it increase the cost? Cross multiply and calculate it. 54,000 into 289 divided by 100. 42 lakh 2060. Okay. So rupees 42 lakh 2060 rupees will be the indexed cost or revised cost, you can say. Okay. Now it is simple. Purchase sale consideration is there 1 crore 46 lakh 50,000 minus 42 lakh 2060 minus 50,000. You will get the long term capital gain. So this part is clear. Here some investment detail is there that we will discuss in the next case. So this much understood, everybody? Whatever we have discussed today.